I'm Will Beecham, ICE's Chemical Business Deputy Editor, and I'm here with Peter Hall, who's the founding partner of Valence Group, M&A Advisors, who are sponsors for the second year running of the ICE's Cavalier Awards. So I wanted to ask you, Peter, about your M&A outlook. Particularly, people at the moment are talking about valuations being high. Would you agree with that?
Well, they're certainly high relative to recent history, but I actually think that really misses the point. You know, M&A is about putting capital to work in order to secure a future cash flow. And when you look at the underlying fundamental economic outlook for the chemical industry, it's never been better. We have all of the mega trends of population growth, aging population which needs more healthcare, rising middle class. The chemical industry is one of the few industries that actually supplies the entire population from young to old. And therefore, I think the economic outlook for the industry is really, really strong. And when we talk to CEOs, we just sense this confidence that they have in the medium and long-term outlook. You also have a very low interest rate environment and plenty of capital. So when you combine confidence about growth with low interest rates, lots of capital, from that perspective, valuations actually, I think, are pretty undemanding at the moment, even if they're high relative to some of the recent history. So actually, we think for buyers now, even if you have to pay a higher multiple than you may have done 2 years ago, the risk-reward proposition is much more attractive than it was.
Okay, and so it sounds like you're really quite bullish. I mean, have you become more bullish, and how does it compare to previous years?
We've certainly been more bullish than average for a number of years now. We've consistently had this view that actually the fundamentals are so strong. So we're not more bullish than we were. We've been pretty consistent in having a view that the outlook is good. But we're beginning to see that now flow through into multiples that people are paying, because certainly multiples are higher. But I think as we move forward in time, some of the opportunities in the developing markets become closer, have greater visibility, therefore perceived as lower risk. And I think that is what giving people the confidence now to actually make larger, bolder moves. Okay.
Let's talk a bit about activist investors. Are they having more of an impact on chemicals?
They are. Activism in general has been a feature of corporate environment in the US for many years. In the last 2 or 3 years, it's become a feature of the chemicals environment in the US. There's been probably a dozen situations in the US, Dow, DuPont, to name just a few. And that is really driving people to think about the mix of their portfolio, the efficiency of their balance sheet, whether or not their businesses are running as well as they could do. And I think the big change is that it's really beginning to happen in Europe now. For a long time, European CEOs had the view, if I'm a large company, if I have a reference shareholder that somehow gives me some protection, if I trade at a high multiple, then I'm safe from activism. Actually, all of those assumptions are completely wrong. If you look at all of the stakes that activists have taken in the chemical sector in the US, they've been in multi-billion companies, they've been in diversified companies, and in nearly all instances, on the day they took the stake, those companies were trading at double-digit multiples. Dow, DuPont, Sensient. So the activists are looking for situations where they can draw spotlight on what they believe is an undervalued, undermanaged situation. Typically, that's a diversified company. DSM now has Third Point on its register. Although they're not being particularly aggressive, they're really adopting the view that the market hasn't seen the value in DSM yet. But all of the big European diversified companies are unquestionably subject to analysis as we speak by activist investors. So it is on the doorstep here in Europe, and I think it's going to be a big driver of portfolio reshuffling here in Europe.
Okay. And are there any other changes in the way that companies are preparing divisions for disposal, if they're considering that kind of thing?
Yes, I think that just as a general comment, people, as they think about reshuffling their portfolio, naturally anyway think about how best to position a company that they're going to sell. So I think that's a natural progression anyway. But I think specifically the Trian DuPont situation, I think, has a very interesting element to it that has an implication for the way people think about divestitures. And that is part of the analysis that Trian has done on DuPont is looking at the performance of the coatings business which DuPont sold. And they've gone back in time, and then Trian has looked at how was the business performing when it was sold, what was the level of overhead that was on the business at the time, how has it grown, how has the margin increased under private equity ownership, and what's the multiple it's likely to be sold for or IPO'd now that an S1 has been filed to potentially take that company private. Take it public again. I think what that means is that as corporates think about selling large businesses to private equity firms that they think may bring them back to market in the future, they're going to be much more cautious about being seen to have sold businesses too cheaply or when the business was underperforming. I think, therefore, they'll be more focused upon trying to fix up those businesses before they sell them. And I also think it'll encourage sellers to think about maybe keeping a stake in those businesses if they know that they're going to come back to market at some point, so that if there is a significant increase in performance, at least their own shareholders will share some of that benefit. So I think it will change the way people prepare businesses and also the way they think about outright sale versus partial sale.
Thanks very much, Peter.
Thanks, Rob. Thank you.